In this video, we will discuss how to trade a bullish market rally. Moreover, we will discuss why this is so important in the context of the aftermath of the US presidential election. Stick around to the end to receive a free trial of an expert advisor, which can be used to trade these exact market conditions. So, we can start off here with the definition of a rally from Investopedia. And it says, as you can see here, a rally is a period of sustained increases in the prices of stocks, bonds, or indices. This type of price movement can happen during either a bull or a bear market, when it is known as either a bull market rally or a bear market rally, respectively. However, a rally will generally follow a period of flat or declining prices. So effectively, a rally is defined as price going higher, and in a bull market that's seen as a bullish rally, whereas if it's more of a pullback within a bearish market, that would be a bearish rally. And what this looks like in terms of market structure is you'd be making higher highs and higher lows. So here you can see that price is clearly in a bullish uptrend. And in terms of what would make this a rally as opposed to just normal market structure would be over a longer period of time, usually with some degree of fundamental catalyst. So a great example would be the recovery from the C-19 pandemic. It was clearly a very, very bullish market due to the global money printing of enormous magnitude. And this caused a very, very strong bullish momentum in effectively all US equity markets, where we saw significant growth in the price of assets. And here we can show another example of this past year in gold. Here is a daily chart of the spot price of gold. And as you can see, since the beginning of the year until effectively the presidential election, we saw significant bullish momentum. So higher highs and higher lows, and just a continuous, very bullish market structure. This was obviously due to the rate cutting cycle coupled with significant political and geopolitical instability worldwide. So this really led to a very, very strong momentum. But the reason why I wanted to make this video is because we are recently in the aftermath, around 1 week post US presidential election. And I'm seeing this as a pretty significant opportunity to capitalize on potential rallies and or bearish momentum created from this election. So I'm sure you've all seen, if you've been following markets recently, post win of Donald Trump, there was enormous bullish momentum in most equity markets. But then, for instance, you can look at the price of gold, where we saw, going back to the previous chart, significant bearish momentum. So I wanted to kind of discuss a little bit why this is. So we can maybe start off with why we've been seeing this rally in equity markets, and why we might actually be able to expect a further rally into the end of the year. And this really comes down to, as previously mentioned, fundamental catalysts. So here's a few points up on the screen as to why the market is reacting so bullishly. We can start off here with corporate tax cuts, in that in the Trump platform, we're planning to see significant reductions in the US corporate tax rate, coupled with deregulation, and markets are particularly looking forward to this. Maybe to touch on the deregulation side in general, as Trump is very pro-energy, likely a lot of the energy companies in fossil fuel exploration will do extremely well under his administration. And even on the tech side of things, with the Federal Trade Commission has been cracking down or being relatively harsh on tech companies under the Biden administration. So by having a change of pace and having people who are more pro-business and pro-deregulation, we may see a significant upside for both tech and energy companies. And we can also see here on perhaps some of the inflationary risks of tariffs. And ultimately, by implementing tariffs, you are effectively adding additional price on imported goods. And the markets are expecting a few different things here. That could, A, be very positive for U.S. companies, because you're diverting U.S. consumers to buy more American goods. However, as you're effectively implementing a buffer of price on imported goods, you could actually just cause inflation of certain priced products in the US, which would then also put pressure and potentially also increase general equity markets, but something else to keep in mind. And in terms of the last point here of election uncertainty, that relates more to both the price of gold and the price of equity markets. So these earlier points almost all relate to why we've been seeing the rally in equity markets. But the most interesting thing I've seen about the market stability is if we look at gold, which is typically used, or not always used, but often used as a hedge against risk. It's a pro-risk asset, whereas investors tend to hold gold when they're afraid of general market instability, because even if equity markets collapse, gold can perhaps be doing quite well, and it also tends to do better when inflation goes down. So here we're seeing gold effectively had a massive sell-off post-election, and this was largely due to the reduction of potential election uncertainty. So markets never like uncertainty, so they were piling into gold. Once we knew who the next president is going to be, there was significant risk off the table. And you could also look into the broader geopolitical context, whereas the Trump administration has shown that they are potentially very open to ending wars worldwide, and that could also perhaps reduce geopolitical risk, which is why we've been seeing this downward price momentum. But I digress. Effectively, there's quite a few points which are on the fundamental side, which are creating this rally. We're not economists. We don't necessarily have to have a strong opinion on the policies. However, we should know that, okay, if markets believe that price is going to go up, there is a good chance that this creates an opportunity for us as traders. So really, now we can move on to how do we want to actually trade this price action. If we see a large bullish rally, how can we as traders make money off of this? Because we care about making money as traders. And really, I'd say we can take a two-step approach here. We can pick the high probability assets and assets which are responding positively to these catalysts. And the most obvious here are US equity indices, as the general market will react to changes in US policy. Another really interesting one here is gold. As stated earlier, the risk-off nature has actually created a current bearish momentum in gold, which has been quite interesting in terms of trading opportunities. However, that could also very well be a temporary pullback, and many analysts kind of expect gold to reverse and continue its upward momentum. So that could be something interesting to watch as well if we see a reversal from the bearish to bullish momentum on gold. And then finally, also specific equities which benefit from the new administration. Most obvious one being DJT, which is Donald Trump Media, I believe, and represents some of his media holdings. Markets effectively are anticipating that as he becomes president, some companies affiliated with him may benefit as well. And on a side note here, Tesla, with Elon Musk being an ally, and he will be heading up the DOGE, the Department of Government Efficiency, that could also lead to more positive momentum towards Tesla. So here, depending on if you're taking more of a bullish or bearish bias, picking assets which are likely to trend upwards and or downwards could be very helpful, because as long as you know that the price action is clean, be it bearish or bullish, you can apply trading systems to benefit off of that. And that leads us very naturally to the second point here, whereas picking high probability strategies and setups. And this really depends if you are an investor or a trader. So if you are an investor, you could perhaps, or all of us traders typically also invest, you could perhaps pick something which is going to have a bullish rally and based on your own fundamental analyses, and then go long in whatever that asset would be with the use of leverage. However, with trading, if you're looking to be more actively in and out, you wouldn't just buy and hold perhaps a levered ETF. You would be able to implement trading strategies and trading bots, which can benefit from these particular types of price action. So, there we go. I wanted to now show what a setup like that will potentially look like. So one of my favorite strategies to trade using robots is breakouts of support and resistance levels. So here's our beautiful market structure diagram previously. This would be an example of a bot or an EA which could place a pending order at the higher high and trade the breakout of that level. this would be typically a type of system which would perform exceptionally well in a very strong bullish market. Because here, as we make a higher high, we have a pullback, but then we will proceed to break that previous higher high to form a new higher high. This is the type of price action where these type of breakout systems work well, because you have nice clean upward moves, and if you reach a previous higher level, you're likely to break that level and continue to the upside as opposed to have a choppy pullback. Whereas in the pre-election market, this particular strategy had a bit of a drawdown because markets were just super duper choppy. So instead of hitting the higher high and then making a higher high, you would have hit the higher high and you would have reversed. But this, now that the fundamentals have changed, this type of system is likely to be very strong. At least that's my hypothesis, going into the end of the year and hopefully for a large amount, if not all of 2025. So if you guys are interested in trying a system like this, I would highly recommend you to head over to our WAP page and check out our Golden Sniper EA, which trades this exact strategy. I'll also link a video to this one, which will go more in detail there. So please try it out, let me know how it goes, and happy trading.